Testing. Testing, 1, 2. Hello, everybody, and welcome to another episode of the First Fruit Stock Club. Got my new hat, and my name, if you don't know, is Donald Green. I'm the founder of the First Fruit Stock Club, and I have a show for you guys today. I'm excited and often motivated, right, to bring financial information that could take you and your family to the next level. All right, so let's do a disclaimer first. So the information provided in the First Fruit Stock Club podcast is for educational and informational purposes only and should not be considered financial, investment, tax, or legal advice. The views expressed by the host and guests are their own and do not reflect the opinions of financial institution, regulatory authority. Investing in stocks carry risk. You need to understand investing in stocks carry risk. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional for making any investment decision. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you're responsible for your own investment decisions. All right, guys. Yes. So today's topic, right? Today's topic is financial traps, right? And the whole focus of the First Fruits Stock Club and the First Fruits formula is to help you in times like these, right? I was just reading a recent article, and the article was saying that people are feeling trapped today, right? You know, you can't really change jobs because the job market isn't robust as it has been in the past, right? Housing is pretty tough. You know, people can't, it's hard for people to sell their houses now, right? And also hard for people to buy, basically costs you 4 times the price in regards to the mortgage and expenses of a house versus 4 years ago. A lot of times people can't afford that and the prices haven't budged. So usually what happens is the prices will budge, but they haven't budged. So today Americans are feeling stuck, right? Stuck in regards to debt, you know, not being able to make the moves that they have, stuck being, you know, the job loss, right? And salaries aren't keeping up with inflation, right? People are feeling stuck right now. And that's the purpose, right? That is the reason why I created this podcast and this whole concept. First Fruits relieves you of being stuck, right? Or stuck in a financial trap. It helps you out. When you make the First Fruits decision, and I'm on this for now and forever, is trying to get you guys to move to a First Fruits decision. Because this economy, it does not care, right? It want, you know, everybody's out. And look, everybody's fighting the economy. But the economy does not care from the standpoint of they have this marketing muscle, right? And this marketing muscle gets you to buy. And you put those things in front of the priority. First Fruits gives you a priority. The priority is, one, is when you get paid, which is today's Thursday, tomorrow's Friday. When you get paid, right? Two decisions you need to make. Not my bills. I know, and if you have to work backwards, you have to work backwards in this. But the decisions that you should make, I mean, I didn't always make these decisions, but when I started saying, wow, man, my finances have gone to another level, right? Basic 2 decisions. One is you give a portion of your salary away. Like people don't know, I can't give, right? Give a portion of it away. The second step is putting money into a brokerage account, right? That's the gist of the first fruits method, right? We're giving and we're investing, right? We're giving, right? And of course, you got to pay Caesar, got to pay your taxes. But after you do that, and that's your real budget. The first fruits really gives you a real budget because what happens is when the economy makes the adjustments, which it always does, right? It makes the adjustments, you know, job loss, due to new policy, um, due to whatever is going on now, it's, a lot of people are worried about their finances and about their household. But first fruits allows you, when you put first fruits in front of your household, it helps you protect you from these downturns in the market, from inflation, uh, from jobs not being plentiful, right? And but it is hard, right? It's hard when you're trying to work backwards, right? You have all this debt. No one's ever told you, like, you have to give and invest before you start to consume, right? Before you start to consume, because like we want to consume because we think our paycheck is ours and we can do what we want with it, and that's not true. It's not true, right? Your paycheck is not yours, not yet. You have to take it through a process first, and the process is the first fruits process. You give a portion, you invest a portion, pay your bills, and then what you have left over. That's your real budget. And for a lot of people, a lot of Americans, that's not their real budget, right? And what happens is when the economy changes, when new policy comes over, right? And you know, it becomes tough and things become harder. And I'm not saying that my life is like totally easy right now or whatever. It becomes hard on everybody, right? When things change. But having a mindset of the first fruits prepares me for these problems that come into the market. They're going to happen, right? They're going to happen, and we have to prepare for them. Okay, so financial traps, and when we don't use the first fruits method, we will become financially trapped. Sooner or later, inflation will catch up to your salary, and that margin you thought you had, it's going to get it and eat it up, right? And what I say is the financial bully, right? People are bullied financially in this economy because they decide that they think their money is theirs and they can do what they want. And they put other things in front of how this economy works and how the process works. And the process is give and invest first. And your money's not really yours, right? When we give and invest, we understand that. That's why I'm here. I've heard anybody else online talk about this. I'm probably the only person, but I'm going to get this out to the masses that, and it may be tough right now, but you can make adjustments, right? Paying down, paying down some bills, may have to get a little side hustle, whatever, right? We don't use that to expand our consumption. We use it to expand our investments, right? But we get so stuck on consumption, and you have to have people have to have a perception of you. That's my gift. I don't care. I don't care at all. I really don't. My wife's like, "Don't you like any?" I don't like anything. I really don't. That's God's gift to me, right? I'm just not in the stuff, right? And I'm thankful, but I understand some people are just in the things. You got to have things, and you can. I'm not saying you can't spend it on whatever. I'm saying that if you want to be able to always have that margin, you have to have the first fruits process in your finances. We give and we invest first. That is the beginning. And once we do that, then we can move to the next stage. Of course, pay our bills and then we spend. But that's the real budget. And what happens is when we come across a downturn and an economy that's a little rocky, it will test your budget, right? it lets you really know, like, hey, I didn't, I thought that I had this, but it really wasn't that, right? So, and because of that, when we don't file, of course, man, we become financially trapped. All right. As the main goes. All right. We don't want to be financially trapped. First fruits allows us to move financially trapped. Okay. Let's move into the next segment of the show. Man, this hat looks good. All right. Let's move to the next segment of the show. All right. And let's get into the market. Okay, so the Dow Jones Industrial Average, man, we as I stated, if you've been watching the show, is that that August September is usually a tougher market, right? There's less volatility due to man is is people are changing, in regards to behavioral changes, meaning seasons are changing and people are adjusting back to school. My kids start school next week. So because of that, the market just, there's not as many people and it isn't as liquid. All right. So therefore, I always said that it was a great time to take some money off the top and put some money aside as we go through this turbulent time, and especially tomorrow. A lot of people are waiting for tomorrow to see what the Fed is going to say, and I'll talk about that briefly. So the Dow Jones Industrial Average down 262 points from last Friday till today. All right. The S&P 500 down 98.79 points from last week until today. And the NASDAQ down, can't even see that. Uh-oh. But it's down. I don't know what happened to that, my picture. Anyway, the NASDAQ is down. Let me see. Find out real quick. In the middle of the show. The NASDAQ is down 606 points from the last week. All right. So yeah, so the market, like I said, as expected, August and September, August and September are usually tougher months in the market. Therefore, we must prepare. Well, July is a great month, so we hit some highs, the market highs in July. So I recommended taking some off the top, putting some to the side, right? Taking some a little bit of that, and giving it away. I know, right? No one else talks about that. You know, giving some away, right? And then getting ready for the next season, right? In which we're going into the fourth quarter. It's like soon we'll be putting up our fours. Okay, fourth quarter in the stock market, right? Is where we really have an opportunity to outgain a year. Okay. So yeah, so let me get into Jackson Hole tomorrow, the annual retreat. Powell and Trump, oops, are going back and forth again. And the 22nd, which is tomorrow, the Federal Reserve Chair, Jerome Powell, will speak, and he will give his view on the market and also discuss. The main discussion is, will he lower rates? Right? That's the main discussion. And we don't know what's going to happen, what he's going to say, and how it will trigger the market. Therefore, we are always invested. We're invested, but like I said, sometimes we're invested a little bit less than other times, right? Last month, we should have taken some money off the top, put it to the side in cash, right? Because we're money managers, right? We're looking for opportunities, but we don't want to be too greedy, right? So we take, when market hits highs, it's great opportunity for take a little bit off the top, put it to the side. I say give a little bit away, right? We giving a little bit away, and giving some away, and keeping the rest of it, and preparing ourselves for the next leg in the market. All right. And that's the goal. All right. So, yeah. So, tomorrow is a big day. Excuse me. Tomorrow's a big day. And we will see what happens at Jackson Hole. All right. All right. Let's go on to the part. All right. So, um, so I'm changing things up a little bit. So this week I'm going to talk about some of the companies that reported, and I'll probably because I report on one stock, just give a quick background and a quick analyze on one of the stocks. This week, Target was Target, not I don't know what do you want to call it now, but Target reported, right? And this has been a lot going on with Target, right? Been a lot going on with Target. Um, with the DEI issue and all. And the stock has suffered. The company has suffered. So let's see. Let's see what Target has done. So Target financial results. Remember, earnings per share, right? So that's what the company earns. So the company has millions and millions of shares outstanding. And what they do is they take their earnings in and they divide it into how many shares they have. And therefore, they create an earnings per share, right? So and GAAP is generally accepted accounting principles. Okay, right, is what the accounting principles that's used to that they use to basically describe a company's earnings and what's measured in regards to company's earnings. Okay, so $2.05 down 20% from a year ago, from $2.57 down 20%. So they took a big hit there. Revenue $25.21 billion, a 0.9% decline year over year. Okay, profit margins, operating income dropped 19.4% to 1.3 billion. Net earnings fell 21.5%, totaling 935 million. Comparable sales decline of 1.9% for the quarter, although digital did grow at 4.3%. So people are ordering. So, so this is what people are doing, okay? So they don't want to go to the store, but they're ordering online. All right. So they still order, they still got the Target boxes coming up to their house, but they don't want to be seen in the store, right? For the backlash, I guess. That's that's funny. I just noticed it. So so yeah, where we go. Digital grew 4.3%. So adjusted earnings per share, credit card interchange fee. So I guess they had a litigation in regards to their credit card fees, approximately 3.35. That's down 27.1%. So credit card sales. Wow. Full year 2025 guidance. They had to reaffirm the guidance, meaning they had to change. Guidance is something that, is your expectation. Hey, we expect to hit this and this for the year. All right. From last year to this year. The outlook was now was $7 to $9. Earlier was $8.80 to $9.80. So that's a big adjustment there, right? When we talk about, remember, these are billions of dollars broken down in a per share basis. Target Corporation has seen a challenging 2025, stock down roughly 25 to 28% year to date, a sharp underperformance relative to broader indices and competitors. Digital engagement has lagged, with app usage and online sales faltering even as rivals like Walmart gain ground. As the company works to realign its merchandising, technology, and customer experience strategies, certainty remains high into the second half of 2025. Persistent pressure from tariffs, rising costs, waning consumer demand for discretionary items has weighed heavily on margins and earnings. Amid multiple quarters of declining earnings per share and sales, analysts have slashed guidance and ratings. Bank of America and Barclays have downgraded the stock, although Oppenheimer remains cautiously optimistic about the long term rebound. So we'll see with that. So in a recent upheaval over the DEI policy rollbacks and the internal promotion of a new CEO have further unsettled investors, right? So, DEI was the real issue. Is really affected the company. Um, and what are we doing? Okay, context and market drivers, digital challenges, competition. Target has seen sluggish digital sales and app usage declines of 14%. While competitor, I was wrong about that. I guess um, the app usage is down, but I guess quarter over quarter compared to last year, it was up. All right. So competitors like Walmart are gaining traction, 17% total. All right. And so earnings and guidance, the company reported a sharp drop in earnings per share as full year, as I stated, outlook of $7 to $9, right? And we have the Bank of America underperformance. So Target is a stock that you know, I used to like this stock, but of course, the performance and uh, going back on some of these things, in regards to DEI, I'm not a buyer of Target. I don't think I own a small amount, but um, so we'll see. I was watching CNN, um, and Reverend Jamal Bryant has kind of led um, this DEI um, boycott of Target, and they hired a new CEO. Hopefully, we can, they can, get some the demands made. I think that but you do have some black business owners who who was able to um, have sales, able to get some shelving for their products in Target, who are suffering right now. So it's kind of like that dual thing. So we'll see how this pans out. But right now, Target is not on my buy list. So there's a lot of better companies out there. And so we'll see what happens with this. We'll keep it right. All right. And another great episode. I appreciate you guys giving me a few moments of your time. Remember, all right, the first fruits method is not just a conversation, it is a strategy for now and the future. Okay. It the first fruits tells your future about the future of the economy, that it tells you that inflation will always be here. Prices will always increase. It's not going to get any easier. I'm sorry to tell you that. They're not going to just roll back prices and say, okay, we're going to go back prices to 2020. It's not going to happen. All right. And I'm going to tell you why. One of the largest expenses, if we would go on the financial statement of Target, one of the largest expenses is, of course, is employees. Right. And unfortunately, salaries don't keep up with inflation. Right. But they have, we'll just see. We'll just see. And I'll leave it there. So, anyway, first fruits, guys, taking those first dollars, investing those first dollars is important, right? Giving those first dollars is important, right? And it helps you in times like these. What happens is we never think that we're going to have times like these, right? All right. But these times like these always happen, right? So we have to be prepared. We have to have a behavior. We have to have a strategy. We have to have something that allows us to prepare our financial futures for ourselves and our family and our children's children. The first fruits does that. Yeah, if you live in the United States, you make more probably than 90% of the world in regards to income. But yet we have statistics like the average American can't, 63% of employed Americans can't come up with a $500 emergency because we can't save. And we can't save because we don't think we're going to have times like these, all right? Times where giving and investing as a priority in front of our finances, right? Not at the back. They have to be at the front. Spending is in the back. We have the orders, it's like in math, the order of operations. We have the order of operations wrong. Giving, investing, spending is in the back. And it's hard. It's hard. Honestly, we can be kind of selfish. We want, and we're advertised and we're promoted to, and that need or that want stays within our mind. So when we get money, we activate that and we act on it. But the first fruits, right, detaches you from your money. And most people can't separate themselves from their money. And that's where these problems occur. All right, that is it. Man, thank you guys so much for joining me for another episode of the First Fruit Stock Club. Hey, you guys have a great week. All right. And until next time, be fruitful.